Hey, fellow traders, welcome back to our Wednesday weekly education webinar. Today we're going to talk about technical indicators. It's really what I'm doing in these is I'm addressing questions that I get, some of the most popular questions that I get, and that's what we're going to be doing today. Now next week, because we had a pretty big request for it, next week we will be doing the Trader's Mindset workshop. We're going to start doing that on next Wednesday. So for for every Wednesday in December, that's what we will be doing. So before we get into the webinar today, we're going to just do a quick recap of my day, the trades I took this morning. DE was the one I was really high on. This is the one that I really wanted to get, because I felt once we got back below this, we would have a nice short. You see, we had a pretty huge window. Or if we held, we would have a nice breakout, over this level. But we kind of got weak going into the open, and I got short here. Now I was looking for a pretty strong move. I really thought we could pull back to this level, or at least come back to the 200. But we got the first move down, and I was looking for the next cover. I think it was through 142 was the next cover I was looking for. Because we didn't really have any levels here, I was going off of whole and half dollar marks. So it took a little bit for us to get to 143.50, but we got it. And then on the next candle, I ended up getting stopped out, and then we ended up coming back. This was just odd. This is not something that you would even look for one candle to do, but it did it. A couple minutes after I put my stop out, it went and hit it, and there it came back. Now, this was several thousand shares. I would say, yeah, they were just looking for that. But this was, 100 shares. Yeah, just 100 shares. And they went back and took it. So this would have been a real solid trade to open the day. But, had no idea we were going to pull back a whole point. You just don't see this that often. And it's just unfortunate, in this instance. But this is exactly why I go ahead and take profit when I can, because you don't know what's going to happen. So I waited until, the conference call started at 10. So I wanted to wait until we got deeper into the conference call to see if that was going to move it. But it didn't. We rejected the VWAP here. I waited till we kind of confirmed under the 9 moving average here, and I got in. This was a safe entry here. And I got in, and we just did not have any follow through. This move did not, follow through below the 9 moving average. It came back, it ended up claiming it, and then we got over the VWAP, reclaimed this 5-minute opening range low, and ran up. So ended up being a break-even day on this one. I think all it did was cost me commissions on this. But everything I did right. I did get in a little bit early here, but I was reading the price action. I was reading the 2-minute chart, reading the price action, and this was a solid entry. This would have been a solid trade. I just got shaken out here, and this was not that bad of a stop. I thought we were over a point away. I thought we were good on this, but today we had light volatility, less volume than normal. A lot of people started their holiday early. We kind of saw it this whole week, light volume. And some people just take the whole week off. And what happens when you don't have a lot of retail traders in like us, some of the larger funds that come in with these huge position sizes can swing stocks a lot more than normal. Because believe it or not, some people may believe it, some people may not. But we, as all of the independent day traders or independent traders or retail traders, we're the ones that keep the market balanced, so to speak. And when we're not in it, you're going to see abrupt moves like this, because huge share sizes can move the stocks, very abruptly. So, and that was in some of my learning I did from, this guy that was a hedge fund manager that pretty much told me all of the secrets and the tricks that they use. And, that was one of the things that he shared with me. So, that was DE. Then SQ. SQ did exactly what I said it was going to do, that I anticipated that it was going to do. But for me, DE was a cleaner chart, because you could see, look at how much room we had on DE versus SQ. And, SQ put in this huge candle at the open. And here we only had, maybe 2 points. DE, I saw 4 or 5 points. So, I kind of waited until we had the bounce. I'm always looking for a bounce. Once we get a big sell-off, there's going to be a bounce or relief. You don't know how far it's going to go. You don't know when it's going to happen. But you're going to get some type of bounce. It may be on the 2-minute chart. Maybe on the 1-minute chart. But you're going to get a bounce or some type of relief. And this, tried to get over red to green here to 200. I thought this was holding pretty good. We had a lot of downward momentum, looking at the moving averages. So I felt it was, a good entry here. And I got in. This was an accident. I was putting in my profit target and accidentally didn't put in 47. And the price that the stock was at the time was in the box, and it executed as soon as I sent it out. So this was a mistake, but I did get a nice hit here. I did get 47 and 46.50, and I was waiting on 46 for the last part. I felt we would bounce at 46, make a push up, and then I would look to get in on a rejection. So we bounced, had to take it off here. This is my profit stop, just over the 9. We did claim the 9, but we rejected. So I got in here thinking, this was solid. We got the rejection here. We kind of flattened out and we started to turn around. I noticed that we were getting, a change in momentum. So this was a safe entry. But no follow through again. We came down, couldn't get through 47, and 47 kept holding. Now, if 47 ever gave up, this thing would have, the bottom would have fallen out, but it never did. So ended up, stopping out here just above the 20. But, this was pretty much a scratch too. So yeah, $17.95. Well, I did lose. I did lose $36 on DE, but then 17. So this was pretty much a scratch. 77.69 is what I lost. Most of it was just commissions. But this was just a product of the day. I should have stopped at 10:30. I should have, after the first moves, I should have just stopped. And that would have, been a great day. And typically that's what you need to do when you have days like today, when you don't have a lot of volatility, just a day before a holiday or a day after a holiday, and you get the initial moves, and then that's it. So I should have been on this thing from the beginning, like DE, take it, and then go to the house. That would have been a good day. But we're traders, and we're going to test the waters. But, was smart enough to know when this day was done, it was time to pack it up. No need to give back what you made this week. Trying to be stubborn. And that's exactly what would have happened if I would have kept trying to trade. I would have given back my week probably. So that was my day in a nutshell. So don't think we're going to do a whole lot on Friday. The room will be open. We will be looking around. But typically, I went back and looked, and for the last 4 years, I have not traded on Black Friday. There were just no trades. So we'll see. You never know. This year is different than all the rest. So, we'll see. The last 2 years, I didn't take a trade the day before Black Friday either. The day before Thanksgiving either. But I did take some trades today. All right, so we're going to talk about technical indicators. And the question that I get the most is, what are the best technical indicators to use when day trading? They want to know what technical indicators I use, which I'm going to go over here in a minute. For those of you who are new that may not know. But in the fact of the matter is, day traders need to act quickly. So trying to watch too many indicators, it can become time consuming. It could be counterproductive, and more than likely it's going to hurt your performance. Because what you have to do, and I've talked about this before, is you have to filter out as much noise as possible. Indicators on your chart is noise. That's all it is. It's noise. And it's yelling at you visually, which when it gets in your head, it turns into you sounding like a freight train going through your head. Excuse me. Now, indicators they're just manipulations of price and volume. That's it. All these indicators, all of them are really based on price and volume. It's just calculated differently. Somebody, who thinks they're the best mathematician in the world, came up with a different and more complicated way to analyze price and volume. And they plot it on the chart. And they call it the next best thing. But indicators aren't required to trade profitably. There are many traders who do not use indicators at all. Now, all they do is read the price action. They read the candlesticks. I mean, you can do that. It just depends on when you start trading, it just depends on your, your feel. What do you like? What do you need to make you feel comfortable in trading? That's what it's all about. When I first started learning how to trade, I learned on a clean chart. When I started learning how to trade the opening range trades, I had no indicators, no levels, nothing. I traded 100% off of the candlestick formation. And it worked in a very volatile market. When the market was good, it worked. But then when the market started slowing down and things started reversing on me out of nowhere, I couldn't figure out why it was doing that. And that's when I started looking at the indicators and trying to figure out which ones make the most sense. Now, again, something else I learned from this ex-hedge fund manager is that a lot of these algorithms and automated trading software, they use these indicators because the computer, I guess now they can program the computer to watch the price action and make decisions. I'm pretty sure they've gotten to that point now. But I guess at the time he was there, the computers weren't doing that. So they were basing their decisions off of where a stock was in relation to an indicator. And our job was really to figure out which indicator is hot at the moment and trade off of it. And that's pretty much what I've done. I figured out which indicators work the best on my intraday chart, and those are the ones I use. I came up with the pivot points on my daily chart. I tried using a daily, I tried using a weekly to come up with the solid levels of daily support and resistance that a stock would react to during the day. And all of that back testing, told me and helped me understand what indicators I need to use. So the best technical indicators for you is going to be the ones that's really going to help you in your trading style and whatever strategy that you trade. There's in chat now, you see a lot of traders talking about the stock reacting to the 100-day on the 5-minute or the 50-day on the 5-minute. I haven't used that before. I have the 200 SMA, the 20, and the 9 EMA. Those are the only ones I use. So now I'm back testing my trades. I'm looking at the 100-day and the 50-day to see, could these algos be using these moving averages now? Is the trend moving more toward using these? And that's the job of us, of retail traders, is to figure out what these guys are using so that we could be on the right side of things. And if we can do that, we're going to be profitable. Amen. I got two of the same. That's funny. Yeah, I had two of the same. I had two of the same slide back to back. Okay. Now, however, indicators, they do help us see things that may not be obvious on the chart or on the price action. When you're a new trader, and this is kind of what we were talking about in the class yesterday. When you're a new trader, you don't know how to read price action. It takes time, and you're not going to come out in 3 months and know how to read price action. I've been doing this for, really reading price action for 3 years, and I still need certain indicators to help confirm what I'm seeing. So those do help. For example, your price could be trending higher, but it's starting to lose momentum. So, and I'm sure you can probably answer this question if you went back and watched the video on the day trading, on the swing trading class, when we were talking about market cycles, and how we can start to determine when a market is starting to change direction, or the momentum is starting to change, or trying to change. We start to see the price action slow down. The candles get smaller, and they're trading in a tighter range. That's what I'm looking for when a stock starts to lose momentum. I'm looking for it to run into a level of support or resistance depending on which way it's going. So even though I'm reading the price action, indicators can help me determine what we're going to do. Like the 9 moving average, if I notice a change in the direction, I think we talked about this yesterday too. If I notice a change in its rate of ascent or descent, then that's going to tell me, okay, we're probably going to start coming back down. It's trying to come back down. That doesn't mean it's going to go down, that there's a 100% chance. There's always a chance that it can get turned around, but there's a 65 to 70% chance that the stock is going to go the way I want it to. And like I said, it's not always right. And unfortunately, indicators do come with their own set of problems. Because if somebody knows that we're using this indicator to plan our buying and our selling around, they're going to manipulate that indicator. Which is why a lot of times you see a stock pull through, and lose the VWAP. Okay, it used to be almost dead accurate that if a stock fell through the VWAP, we would continue to sell off. Now, it can fall through the VWAP and not really go the way we want it to. It can turn around and come back and start going the other way. Because that's manipulation. They know what we're looking for. The market makers, they know what we're looking for. They know what we want to do in order to, or what we're looking for in order to go long or go short. So, these are things that we have to be aware of. And so we have to make our decisions based on what we see happening over and over and over again. So that's why I always say, if a stock loses the VWAP or loses the 20 or whatever, I like to wait for it to pull back and test it. Because oftentimes when it pulls back, it goes back above it and it keeps going higher. So that was a fake, a fake out. So you have to, they're not inherently good or bad. Okay, they're just a tool. And how well that tool works depends on the skill of the person using that tool. And that's pretty much in anything that you do. You give somebody a dentist drill to go in somebody's mouth to drill out a cavity, and they don't know how to use the tool, they're not going to do a very good job. So how well, and it could be the most expensive tool in the world. But if the person using it doesn't know how to use it, it's not going to be worth 2 cents. And indicators are the same way. We can put all the cool indicators on our chart, but if we don't know how to use them, it's not going to do us any good. So putting the same indicators that other people have on your charts is not going to do you any good unless you actually learn how to use those indicators. So these aren't all the type of indicators, but these are the ones that are the most common that I get asked about. Okay, but there are two types of indicators. You got leading indicators, which are indicators that's ahead of the market that can kind of give you an indication of what's about to happen, like volume. You know, volume could be considered a leading indicator because when you see volume coming in, you know, it's ahead of the moves. It's going to be ahead of a move. So that's going to tell you, like if we're looking for a reversal, a top reversal, and we see a huge spike in selling volume, buying volume, then we know we're probably exhausting the buyers. And that's a volume top. And that's telling us that the market's probably going to start to head back down or make that turn. It's going to try to make that turn. So it's letting us know ahead of time what's going to happen. You know, the lagging indicators are, you know, most of the ones that we use, like the RSI and the MACD and the VWAP and the moving averages. You know, those actually plot after the fact. So it's telling us what happened in the past. You know, what actually happened in the past. And so we can try to make decisions of where the market is going in the future, but we're basing it on, you know, lagging information that's already happened. It's not happening now, it's already happened. Because it calculates that and then it plots it. So those are the two things that we need to be aware of. And I know, you know, this can be a lot more technical and a lot more difficult, but it wouldn't do you any good. It would be a whole bunch of noise to confuse you and to make it seem like my knowledge is 50 times more than your knowledge because I can recite these terms. That helps nobody. So I'm trying to keep this simple and only talk about the studies that we may come in contact with or that somebody may ask about in chat or, you know, whatever. And so the momentum, you know, and this is kind of how I break it down. Now, obviously, it just depends on, you know, what kind of sauce you like in your taco as to how you break these down. But for me, I'm looking for momentum, I'm looking for market strength, and I'm looking for volatility. And the momentum indicators, I like to use a RSI on the, you know, for my day trading. The MACD is something I use in swing trading. And I don't use stochastics, but, you know, a lot of people ask me about it. That's just something that I don't use. What's another one? I didn't put this down. Fibonacci. You know, I don't use the Fibonacci, but a lot of people have adapted it to my strategies, and it works real well. It's just something I haven't, you know, really looked at yet. I guess if these things really start failing on me, then I may start to look at, you know, where do I need to adapt to the change in market conditions. But, you know, I don't use those. So when it comes to market strength, I use the VWAP and the moving averages. You know, and for me, if we're trading above VWAP, then I feel that that's a sign of strength in that stock. If we're trading below VWAP, it's telling me that it's, you know, weak. And so we'll, in the class, we actually will talk more specifically about each of these indicators. We really break it down when we start looking at our charts and we start actually, trading live trades. That's when we'll really dig deep into it. And then the volatility studies, the Bollinger Bands, the average true range, and the volume. These tell you how volatile the markets are or how volatile that stock is. Yep, and you see, somebody just posted about how DE stopped and reversed at the fib extension. There's several traders that have adapted that to the strategy that they learned from me, and they've taken off with it. So it's probably something there. I wouldn't doubt it at all. All right, so on my chart, just in case, like for the newer guys, you don't know exactly what I have on my chart and what I'm looking at. I'm looking at the candlestick. I'm looking at the price. I'm looking at the volume. Those are the three things that really, matter to me. That matter most. That's what I'm really honestly and truly looking at when I'm reading the price action. Now, yeah, I'm looking at time and sales. I'm looking at time and sales. I'll add that to it. I'm looking at level 2. But like level 2 is just a tool. We all know it can be manipulated. So we have to be careful with that. I'm looking at time and sales, and I'm watching the time and sales tape, which it takes practice because it moves pretty fast. And to be able to add these numbers up is almost impossible. So what you're doing is you're looking at kind of observing how many orders are going through at one price. And if that price is not moving on level 2, then I know there's a lot of hidden size there. I know we're at a legitimate supply zone. And based on whether we have red prints or green prints, that's going to tell me, is this a level where we're running into a lot of sellers or buyers? What? That's going to give you some indication of, okay, I need to watch this closely. And potentially, if I haven't taken profit, I need to take profit. And that's what I'm looking at. And that's what I'm talking about every day. And that's why I'm trying to show you in the trade, what I'm talking about, what I'm seeing, what I'm looking at. Because the more you trade, the better you're going to get at really being able to detect changes in momentum. All right, so the moving averages, okay, I use VWAP, the volume weighted average price. I use the RSI. And then the moving averages are going to be, let's see, the 9 and 20 EMA. And the 200 the 200 SMA. That's what I use. Excuse me. And I don't want a whole lot of garbage on my charts. I have enough on there as it is. So I don't need more garbage to decipher through. So I'm going to use everything that I can that's relatable, and that I actually use to help me make trade decisions. So pivots from the daily. These are the last things that I use on my chart. I'm probably 99% technical trader. The 1% that I use as fundamental is going to be the news. Other than that, I really don't care when I'm day trading. It's all about technicals. It's all about what I see on the chart. It's all about what I see. So let's look at DE. We'll bring this chart in here. Yeah, my internet is real slow now. It's after 5 o'clock. Everybody's home. So everybody's using their internet. So my upload speed is going to slow down. It's going to take a little bit more time to load up here in chat. All right, so this is DE, and this is what I was looking at this morning. Here was a previous 52-week high. Okay, and I'm looking at what this has done in the last month. Okay, the last month we put in a 52-week high. We pulled back to the 200. This is one of the strategies that we really love to see. Our 52-week high breakout. And this is why we wait. We never trade the initial breakout. We wait for it to pull back. And ideally, we want to see it pull back to the 20 and bounce off the 20. Because if it does that, we can actually get in a little bit early. If not, we wait for it to get back to the 52-week high. Once it breaks it, we got a nice breakout. So, I noticed this. And we had this huge gap up. So for me, I'm looking for some retracement. I'm automatically going to look for some retracement today. Now, it could definitely run up to 150. And if we set up long, 150 was going to be my target. Because that's a strong psychological level. Like 100, 50, 150. These are strong psychological levels. And I felt that if it got to 150, we were going to get slapped back. Or if we started to go long, we had a nice run up to 150, and then I was going to short that like you wouldn't believe. So that was my plan on it. That's what I was talking about, this morning, having a plan going both ways, long and short. So looking at the daily chart, I marked the pivots. Obviously the only one that would matter is this one, which was a previous 52-week high. Probably was an all-time high as far as I know. It was making its all-time high. So obviously I'm going to look for a little pop and a pullback, and that's pretty much what we got. Just didn't get the pullback that I wanted to get. So let's look at the 5-minute chart here. Give it time to spool up for you guys. Just had a little, this is just bad luck. Just bad luck. How I got stopped out before we finished making the move. But you can see exactly why I chose this stock. The only thing I didn't like was that conference call was at 10 o'clock. I like everything to be done before market open. But I expected to be out. And really the plan did work. Just a little bit of bad luck, messed me up. So on this chart, you can see I've got the red line is my 9. The blue line is my 20. This white line here is the 200. And the purple line is the VWAP. Now, these two yellow lines here, these are the deviation bands from the VWAP. +2 and -2 standard deviation from the VWAP. I use these typically the way you would use Bollinger Bands if you use Bollinger Bands. If this thing gets outside of these deviation bands, I'm going to look for a reversal. I'm going to look for a bounce. I don't expect this to trade too far outside of it. Now, I see this was trending down. Whenever we have a whole lot of volume, that's going to open these up. Now, once we get past 10:30, everything kind of flattens out unless we get a huge amount of volume to come in and act on it. Other than that, we're going to kind of trade sideways, and this sets the range for this stock. Now, that's not to say it's going to test the high and the low of this range. It's not going out of this. For the most part, unless we get a catalyst or something, it's not going out. So I'm using these kind of like the Bollinger Band. But I like these because it's part of the VWAP study, and it's worked so great for me. And this is all I have on my chart. Now this study, this is a 5-minute opening range. Some people, I know don't like it because, for one reason or another. It doesn't start on this candle. It starts on this candle, and it does that for a reason. For people who are just starting, you don't get in this trade until the candle closes outside of this range. Bottom line. If that's the rule that you want to use when you're beginning. And that's why this study is set up this way. Now, sometimes it will pick up off the pre-market. If it does, you better trust it. Because if this picks up off the pre-market high or low and it ignores this candle, it's doing it for a reason, and you need to trust it. It's proven to me that I need to respect this. So, but then again, it's up to you. And trading is an art form. It's 100% an art form, and whatever we can do to make it our own, then that's what we need to do. So I wanted to share with you, all of the indicators that I use. And again, in the class, and everybody has access to the class. Everybody that's a member has access to the class. So if you missed the class, the recording is there. And, we have live classes on Tuesdays and Thursdays. And everybody in the community has access to it. And if you don't know where to find it, email me. Or if you don't have access, email me and I'll make sure you do. But we will talk more in depth about using these indicators, because I do use these to make trade decisions, and I use them differently based on whatever strategy I'm trading. So as you're learning the strategies, you're going to learn exactly how I use these to help me make trade decisions and understand why I do what I do, why I take profit when I take profit, and why I let trades work when I let trades work. It's all based on these technical levels and what the chart and price action is telling me. That's part of the study. The study has that. It's part of the code. Like, you can look at the code and you can change the colors of the lines if you want to make them a different color. You could change the shade. You can make this a different color shading. You can kind of change the study, once you get it. It's a user-defined study, so I'd have to send it to you. It's not part of Thinkorswim. It's one that you have to add yourself. So if you just email me if you want it, and I can send it to you. But I like this not so much. I don't look at it so much when I enter now, because I'm at the point where I don't need help with entry. But I do need this later on during the day when I'm making trade decisions. Because if we reject here and we reject the 5-minute open range low, this is definitely a sign for me to take it short. It's worth a shot on this secondary trend continuation to make a new low and keep down. If it doesn't, if it bounces and it makes a new high, then yeah, the move is dead. Especially if we get back over this. But this shaded all day helps me, stay out of trades that don't make sense. Like this trade here, no way I would have traded it later in the day. I would not have taken this unless we got outside of this and we had more volume. So these indicators do help you. You just have to know how to use it and know which ones to use. Alright, so to sum this up, there's no single indicator that I feel is the best for day trading in general. The best indicators are the ones that work with your strategy, with your system, the way you trade. That's going to be the best indicator. Again, technical indicators are just tools. They don't produce profits. Profits require a trader to use those tools and the analyzing price action the right way. That takes practice. That's why I'm so adamant and get so upset that people try to sell you something and say you can start making money in 3 months. And you haven't really looked at anybody trade live. You hadn't had anybody talk to you about what you need to look at, what's important, and how to get in trades. It's so much that you have to learn in order to be successful, and it takes time. Some people can do it in 8 months. Some people it takes 2 years. The key is, if you quit, it's going to take forever. Everybody can do it. We all have it in us. It's just, are we willing to, pay the price? And it's not money. It's not the most money you spend. It's how much sweat equity you put in. Now, that's what it boils down to. So whatever indicators you decide to use, don't use a whole lot. I use 3, pretty much. I use the VWAP. I use the 3 moving averages. Now, I know the deviation bands, that's still considered one indicator. Even though it's 3 parts, it's considered one. So I only use those indicators on my chart. Now the RSI is a lower study. It doesn't add any noise to the chart because it's separate. It's a lower study. But when you're looking at your your chart, you don't want to put so many studies on there that you can't really see the price action. I can add, and let me show you what I'm talking about real quick. Let's see, I'm going to add, let's see, I'm going to add the 100. Let's put the 100 on here. Alright, and let's put the 50 on here. God dog it. Let me do it this way. Moving averages.
So,
Exponential.
you never told me about that.
So we're gonna add the 50 now. Let's see how crowded we can make this chart. I'm gonna do the 50. Let's make this yellow. Oh wow. And now let's add let's see, this is going to be market strength studies or momentum studies. Oh no, volatility study, that's what it is. Let's add some Bollinger Bands. Alright, look at that chart. Now how the heck are you going to trade like that? And there are people that have all of these indicators on their chart because they follow 2 and 3 different people, and each person uses a different indicator. They use it a different way, so they got all this garbage on their chart, and they wonder why they can't make money trading. Number one, you following 3 people, and you need to. It's fine to follow 3 people, but eventually you're gonna have to pick one to follow that trades the way you like to trade, or that you want to trade. Once you choose that, then you stick with that person, use what they use, and try to establish a foundation before you start building higher. Because this is a mess. There's no way I can trade this. Now, if we add some doggone, let's say we add some more our technical levels in. What is this? It just gets worse and worse. It's like a nightmare. Alright, so then using too many indicators again is redundant. It could actually lead to a worse performance. In the same way, if I'm using the Bollinger Bands and I'm using the deviation bands from the VWAP, that's redundancy. I know they're calculated a little bit different, but you're just being redundant there. And the main thing is you need to know and understand your indicators. What are the drawbacks to using it? How does it produce false signals? What good trades does it miss? What does it fail to signal? Does it tend to give you signals too early or too late? Can you use that indicator to trigger a trade? Like the VWAP. We use the VWAP to kind of it's not supposed to be a trigger to enter or exit a trade, but we use it. So all of these things you really need to think about when you start getting into technical indicators. And this is why, if you ask me about something, I'm not being ugly if I tell you, I don't use it, I don't really know a whole lot about it. Because I'm not wasting my time studying something that has no use to me. Now, in my free time, on the weekends, I am looking at the effect of the 50 and the 100 day, the 50 and the 100 moving average on the 5-minute chart. I'm looking for that. I'm looking at, how that works. I'm starting to learn a little bit about Fibonacci to see if that can help me be more effective. But I'm not going to bring that out until I've had enough practice. And that I've been able to put it in practice. And I use the on-demand feature to practice these things on the weekend. So before I use any technical indicator, I'm going to make sure that I know and I understand, what it actually means. All right, so the last thing I wanted to show you was how, and I keep picking the wrong chart, of course. This is what I look at every day. These are the charts that I'm looking at, that I'm making my decision. Now I know my DOS chart is what's up there because that plots my entries and exits. I don't want there to be any guess as to whether this is going in or going out. I've seen people do some crazy things. So I want you to see the DOS chart. I try to mark it up, and I want you to see the entries and the exits plotted on the chart, because all of that's going to help you. But the charts that I use to make my trading decisions on are going to be these Thinkorswim charts. And what I'm looking at is 5-minute chart here, 2-minute chart here, and this is how I'm looking at a 2-minute and a 5-minute at the same time when I'm trying to judge my entry. I've got a 30-minute chart here that's helping me see the overall trend a little bit better, and I have a 60-minute chart. So this is for long-term trend analysis. This is only for entry, to help me gain a little bit better entry. This 5-minute chart is what I manage my trades off of. And I have 3 screens with, this setup on it. So I've got, I can watch 5 stocks and the SPY. The SPY is going to be on one of those all the time. So I can watch 5 stocks. And that's where the problem comes in sometimes, because I'm watching too many. I'm not confident in the stocks I choose, and I start watching too many, and then I get, confused, and it messes up my day. So now I'm picking 2 stocks to look at. I got a main screen. I picked, like this morning, I had on the one that's in front of my face, I had DE. And I had SQ. So these were the 2 that I was watching. And I could see very quickly, what to do here. All right. Anybody have any questions? All right, you are welcome.